and that's what you're seeing, and you're good.
Good afternoon, everybody, and welcome to Afternoon Market Action. My name is Glenn,
My name is Ryan.
and I don't have my hat today. I totally forgot all about today was Trending Thursday, AMA.
You don't even know what day it is.
This is the first time since I initiated this about 2 years ago that I did not come to work with a hat. So it's kind of interesting. If you can hear us loud and clear, by all means, please respond in the affirmative. Preferably with VV Nation to let us know that we are coming across loud and clear on your computer. So, Wednesday. Overslept this morning. Just a long morning. Well, it is what it is. It is.
You know what just came in? The interest rate decision.
It did. What did it say? Unchanged. It should be.
I'm pulling it up right now. Takes less confident view on inflation. Well, we kind of knew that was going to happen. Nothing happened.
Let's go see.
So it's at 4.25%.
And it's going to stay there. It's probably going to stay there, I think, until Fed holds rate steady, takes less confident view on inflation, just like you just said. I think that the interest rates should stay right where they are probably for the first half of the year. You think that's aggressive, Ryan, or not?
I'd be surprised if they don't stay flat for the whole year.
Yeah, we got a president.
As long as inflation has been ticking up.
It all depends. It all depends. You got a president saying we're going to make it, we needed to go down. We'll see what happens. Mm-hmm. At 2:30, folks, we will have the live presentation of the meeting. We'll have it right here as well. Hey, San Fran. All right, so that's what we got going on. Before we get into the stories, though, I do want to get into what's going on in the market. Let's start off there. DeepSeek hit. I did a video last night. Y'all didn't like it. That's okay. DeepSeek versus OpenAI or ChatGPT. I put my feelings out there in regards to it. It's cheaper. I don't think it's as cheap as they said. They're saying that they do have about 50,000 NVIDIA chips, but they had to use probably lesser quality chips. And the whole thing for me is doing the research, all they did was take ChatGPT and query, all the way, ask the same question over and over. And they made a model after all those queries. That's what it did. All right.
Jazz it just improved on an existing model. It didn't really create anything
No, it wasn't
new.
Innovative in any way, shape, form, or fashion. Mm-hmm. Jazz says they got a 25-point cut up in the 51st state.
I saw that, Jazz. It looks like the reason why you got your cuts because of potential tariffs causing inflation. Yep. I saw the article. And that's going to be the curveball this week. This year, how tariffs are going to affect inflation and how that inflation will thus affect the interest rate.
I am of the mindset that the tariffs are a tool. Just like they used the tariffs to get the people in Colombia to take their people back. I think that the tariffs are a tool. And I don't think that we're going to just tariff the heck out of everybody because I think that the new administration knows that tariffs is going to cause inflation. So I think that, in my personal opinion, that tariffs will be used as a tool. And now a lot of people are going to say we're going to bully our way in the world by using tariffs. Well, if you don't want to pay tariffs, then you don't do business with us. I mean, that's the way I look at it. Then do we become an isolationist country? I don't know. There's a whole bunch of stuff that can happen from that. There's a whole bunch of stuff that can happen before that. If the market falls before Powell talks, will it then fall more or go up? John, how am I supposed? Do I have a crystal ball?
It's falling right now. And Ripman, thank you for the comment, by the way.
And there it is. There's that level of resistance. And look at it falling right now. I'm going to move this over to intraday. Intraday, 1 minute bars, current day. So the announcement comes out. Let's take off, use pre-market. The announcement comes out. And intraday, 1 minute bar, current day. There we go. There's the start. There's the start right there.
Rough.
So I think, the cool thing about the VectorVest software is The underlying trend in the market is down. The primary wave is down. 3 red lights creeping up. All of the indices down. I think that the VectorVest system is doing exactly what it's designed to do. We're moving from caution into a little bit more defensive. All right, no matter how good the stocks are, I think. You know what I think? I think DeepSeek was a catalyst that the market could use to go down because it probably needed to go down. You know?
Yeah, I think the market needed to go down a little bit. Obviously, I don't think DeepSeek was the real reason. I think everyone was just trying to find that catalyst, to take some profits.
And maybe we got it. Maybe we got it. But I'm looking at us moving sideways for the last 3 days. We're going to keep our eyes. I know JD is looking at some level. 606 cents. Bank of Canada and EU have cut rates in anticipation of tariffs, and they probably will cut rates in March as well. We'll see if they do. All right, we'll see if they do. All right. I want to stay on this graph. Let's go into some news. All right, let's go into some news. First news story is DeepSeek. I'm going to spend a little bit of time on DeepSeek still. I think that DeepSeek was overreacted to. I think that the more you look at DeepSeek on the top side, it looks really good and fancy and beautiful. But they didn't innovate. And if you're in a communist country, there's no incentive to be innovative. Because you're innovative, it all goes to the glory of the country. So DeepSeek absent from app stores in Italy. Chinese app trails Western rivals in accuracy. Cool thing, I did mention this in yesterday's video. Interesting that maybe the hack was planned on their part. Now, again, this is me talking. I ain't got no news to back this up, okay? I'm thinking that the hack was planned on their side to stop putting it out to everybody else right now. We saw it. We were like, ooh, oh, the hack hit. Oh, we're not taking any more registrations except for in China. That's it, unless you have a Chinese phone number. But a lot of people now have it on their phones. A lot of people had an opportunity to look at it. So it was sort of like, hey, let me give you a piece, America, and take it back. That's what I think the hack was all about. And I just don't know how sustainable it is as compared to ChatGPT, where people feel a little bit more comfortable. Right.
And John, I agree with your analogy there.
DeepSeek sounds like a friend of mine telling me the guitar he bought on Temu is better than the American Fender. Ooh. Yeah.
It's kind of funny, but kind of true at the same time.
Ripman says, Glenn, did you see Alibaba release their AI model open source as well, which is better than DeepSeek? No, I didn't see that story. I don't want to hear anything more about it. I'm tired of talking about DeepSeek. It's deep crap. That's what it is. I just renamed it. All right, next story is Ryan's.
All right. Sorry, I'm pulling the story up on my side. It's a little small on your side, Glenn. Let's see here. All right, so China's search. So we know that China, looking for something different here to spruce some of their economic development. A lot of that was in the real estate. Remember we talked about potential real estate bubbles, and was it the Evergreen that was having the financial issues a couple years ago back during COVID? But right now, with U.S. tariffs and a property market collapse, this is the second bullet point, Chinese equities outperform other emerging markets in 2024, expected to grow further. They're ditching the real estate, and they're moving into EVs, which we already know, semiconductors, that's it's already polarizing the world, and robotics. So on my list, I'm going to put Tesla, and I'm probably going to short it today. I don't think I've done too many short positions. Let's just be honest. Even if Tesla can, come out with the robots and they work, it's not going to be much longer before China does the same thing and they're a fraction of the price, just like Boyd. And I want that thought on everybody's radar when it comes to Tesla, because right now it's trading at an incredible premium. And I just don't see that continuing much longer. I don't know. What are your thoughts on that? I know you like Tesla a lot.
I think that the relationship Elon Musk has with the president might carry Tesla a little higher.
I don't disagree with that.
and
I
I'm
think
with
that would
you.
be the one savior in the meantime for
I'm
Tesla.
with you that it is grossly overvalued. But Tesla's got their hands in more than just EVs. So I think that helps
Correct.
them as well. So we'll see. All right. Let's go to the next story. Microsoft said to be probing if DeepSeek improperly used OpenAI data. Again, someone said about, what did they say? Oh, Seth says the price to train AI model now is going to be way cheaper than ChatGPT is already out. Did they really train a model, or did they just reverse engineer a new model, Seth? They use, and I think that this story starts to talk about it, that I think China, all they really did was just go to ChatGPT and just start querying, deeper, and made a model off of those deeper answers. All right?
So they copied it, essentially.
How about this private account? Can you hear me now? I'll move the mic closer.
Oh, yeah, private account.
Yeah, I'll move the mic closer. All right, so that's going to be an inquiry. We'll see. Next story, Ryan. The key figures of Wall Street is watching in Meta, Microsoft, and Tesla earnings.
All right, so as I scroll down this article, the first thing I'm going to talk about is Meta. Every time I ask Google who owns the most H100 chips, it's always Meta at the top of the list. I know at the end of 2024, they're around 350,000, depending on the article and the date. By the end of this year, they're aiming for 700,000 of these GPUs. They're blasted everyone else out of the category. I know XAI is in the top of the list. Microsoft's, on the top of the list. So there are other big names, but I think Meta has got a huge advantage, especially if these chips become, harder and harder to get with their demand. Now, as far as Tesla, we did the earnings call last time with Tesla. And you remember Elon came out with a very lofty goal of a 30% increase in deliveries. That's all that matters with Tesla. If they miss that, if they're not on track for that, all that hype that we saw from the last earnings, it's gone. And as far as Microsoft, its market cap is so big, everyone is focused on the cloud space when it comes to them. That's going to be their biggest growth story, will be the Azure cloud. So, again, we've got a live stream this afternoon. We will definitely, be paying attention to exactly what was said. And the number one number I'm going to focus on Microsoft this evening will be the cloud data and see the growth in that cloud data. Because, with the market cap at $3 trillion, it's hard to, find growing segments of their business, right? It's just so large. So that's the focus I have right now when it comes to Microsoft. But really great article. I think all three of those points for each of those stocks is very valid, especially in today's day and age.
All right. Next story. This is something that concerns me. Is and as much as I love Apple, and as much as Apple went up on the DeepSeek day, right? But Apple gets downgraded on reduced iPhone sales estimates. That's the crux of their business. But what carries them from an earnings perspective normally is the service side. I did a story a couple of weeks ago that talked about the phones, as expensive as they are getting to be more in tune with the cost. So in order for that to really happen, to start making money on the phones, really making money on the phones just outside of the sales, is they got to sell them. And I'm thinking that the tariffs, who's going to be Apple's biggest customer? China. All right, because that's where the most people are, and, they all want the phone. So I reduced iPhone sales estimates is going to be very interesting. Oppenheimer analysts point to two main challenges facing the iPhone growth: increased competition. There's more and more phones coming out.
Huawei.
And this is huge. The lack of innovative Apple intelligence and generative AI.
Yeah.
Man.
That's why you got to go Google. Glenn, you know this.
No, I don't know that. Google sucks. Anyway, this is where somebody like Steve Jobs is greatly missed. After his passing, Apple wasn't super innovative. Apple does a really good job of taking technology that the dark side brings out and makes it better. with the exception of the
Dark
camera.
side.
With the exception of the camera. You know, Apple looks at what the dark side does and goes, oh, we can make it better. And that's what happens. But the innovation is not there. And I'm not afraid to say it. It's the truth. It's not there. And without the innovation, it's going to be tough. You know, will Apple keep up with existing technology? But they got to get in. And they don't have another Steve Jobs there.
Other than, innovativeness, and obviously I told you this, tonight's video will be on Apple along with NVIDIA.
Mm-hmm.
So I have a friend that works in Shenzhen, part-time at least, travels out there a lot, where all the Apple and all the smartphones come from, right? China's caught in a bad spot. Not only are a lot of their customers in China, but the manufacturing is all in China, Shenzhen for the most part right now. The province. So I don't know. They have a very, other than, losing customer share and innovation, they have a very difficult, at least year ahead of them when it comes to navigating geopolitical and tariff disputes, because they are caught right in the middle. And I won't talk about it too much because it's tonight's video, but I do see potential in Apple, but not a whole lot. I don't think it's a good time to buy.
And Chris is right. Apple's the beneficiary for Apple is the ecosystem. All of the other, it's the service side. It really, really is. But there was a glimmer of hope that the phones could start to carry their weight just a little bit, and it looks like right now that's not going to happen. All right, Ryan's got a story about housing sales.
Real quick, BCH, the next VectorVest broadcast will be at 4:45, and that'll be Meta's earnings, Microsoft earnings live. And we'll probably be talking about Tesla since it also reports after the bell. All right, so my last story here, Wolf Street. Essentially, I've seen a lot of stories come up. New home sales, existing home sales on the decline. As I went through all of these little charts, I mean, Glenn, you could scroll down, but there's all kinds of statistics here, blah, blah, blah. And you know what it's telling me at the end is that we're getting real close to an 08, 07 situation. So I looked at DRV, and am I going to say it's a 07, 08? No, I'm not going to say it's that far. But I am looking at DRV because it broke a downward trend line. That is bearish real estate ETF. Even hot spots like the Southeast, parts out West, there are, issues, with rising interest rates, home prices either flat or steadily on the decline. Because I'm looking around here in the Charlotte area for a home. I'm seeing all these housing prices slash, 15, 20, 30 grand, sometimes more. But definitely an interesting article. Obviously you can probably find some other things on the internet, but just, be careful when it comes to real estate in general. I don't see it being, a phenomenal year or really much a good year at all, compared to the, think about it. We had such a large growth in home appreciation since COVID. I see that slowing down just, with the articles I see. And, as I said, I'm looking at, real estate online. I'm seeing the prices getting slashed quite a bit, actually. And that's it for my stories. What else you got going on today, Glenn? Got any more good stories?
I got one, Bitcoin.
Yeah, hey, we can talk about Bitcoin. Well, we got 10 minutes for the Fed.
Stupid crapco.
Stupid crapco.
All right, so I just wanted to go to the news on CoinMarketCap just to see what was moving around. Arizona may soon invest up to 10% of its public funds in Bitcoin. And that's something Ryan's been talking about. Mm-hmm. Pioneering state-led crypto investment. The new Bitcoin whales emerge, signaling increased institutional interest in a potential market stabilization. MicroStrategy, stay away from it, purchased more Bitcoin, boosting its holding to 471. That's a lot of money. How much money is that? Do a calculation.
And Michael, I'm not surprised that DRV is moving up. We got high interest rates and a whole lot of fake money in the market right now.
Is it really high interest rates? The interest rate,
relatively speaking.
Well, it's potentially high interest rates. Not high. Hold on.
Historically high, no. But in the last 15 years, 20 years, yes, high.
Interest rate.
In the cheap money era, yes, we're talking high interest rates right now.
Federal Reserve.
Relatively.
CMA, Fed2, gross domestic product. Where is... I got a Fred. that looks at interest rates somewhere.
We can use a market climate graph.
Yeah, I could. I'm going outside of that.
I
I am going outside of that because I want to go to a federally recognized tool. You understand what I'm saying?
Okay.
That's all I'm looking for. Fungus. I can't find it.
Because back in 2019, the T-bill rate in VectorVest was around 2.8. Right now, well, it hit a high around almost 6, about 5.75. Yeah, about 6 there. And then right now, it's currently sitting 4.35. So yeah, and even prior, like 2016, the T-bill rate here in the VectorVest software is, I mean, it's like 0.2.
T-bills 4.35. And
you got the Treasury note. I mean, we're
that is
pretty
falling.
high. I know if you go back 40, 50 years, definitely, 70s, 80s, 90s, yeah, we're low interest rate, but we're not in that type of economy. We're in that type of financial system anymore, unfortunately.
Yeah, that was the high point back in COVID.
And
times.
houses were like a fraction of the cost they were now.
I'm looking at it. Interest inflation is slowing. I don't call it on the rise. I think potentially it could be. CPI is sitting at 2.9. All right, by way of VectorVest, sitting at 2.9. Still a lot lower than what we at 9.
Because at 3 months ago in October we were at 2.4.
And we're
CPI.
And right now we're at 2.90.
So that's why I say on the rise, at least over, it's coming back softly. It is coming, it's starting to trend up a little bit. 3 months in a row.
Yeah.
Rod says Yahoo Finance 30-year mortgage 7%. Yeah, I was talking to a family member yesterday. They were happy to get locked in. I think it was like 4 3/4, and they just did this about a year ago.
All right. Let's go to viewers.
Get ready for the Fed. Hey, we'll have Joey here. We can play our Fed video with Jerome Powell dancing.
Joey's not
like
here.
That one.
All right. We got 8 minutes. Let's go through your picks, Ryan picks last week.
And Chris, yes, that's what I'm talking about. The interest rate so low, so much cheap money. We're not in the same economy we were back in.
But the problem
20,
is with that,
ago.
we've gotten spoiled to the low interest rates. We've gotten
Imagine
spoiled.
if interest rates jump up to 8%. You think housing prices are going to stay the same?
No. Let's quick test them.
Again, be careful when it comes to real estate right now. That's all I'm going to say.
I don't want you to overtalk this. Look at this. Those are your picks from last week.
Ooh, what is that? Oh, no, I can't even see. I got to zoom in.
ARM down double digits. Marvel, AVGO, SoftBank. The only stock that made money was QCOM, is only up 1/10.
Okay.
All right, let's go to your picks. Let's go to your picks for this week. Anything you want to say? Remember, we got 7 minutes. Anything you want to say about any of these?
No, I mean, they're all tech, and they're mostly reporting earnings really soon. The one I'm most optimistic about right now would probably be DRV or even AMD. I even mentioned that in tonight's video that I'm probably going to be doing an AMD video real soon. Just the valuation, the space, I like it. The other ones, I'm not going to buy today. We'll see what happens after the interest rate. We'll see if we'll add any, but see if the market turns around, but not today.
All right. Let's go to my picks for last week. I had a lot of stocks. I do like this airline. Netflix, good pick, blah, 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 blah. Okay. Let's go see. This deep sea screwed up everybody.
Everybody.
Quick test. I'm only down like 4.8%. 2 double-digit losers, SoftBank and Qubits. Oh, man, everything got killed. Glenn's picks this week. Only one stock is going up. I got Bitcoin because of the crypto story. Microsoft because of the OpenAI. Coin goes with Bitcoin. And Apple's downgrade. Interesting on Apple's downgrade. I got nothing. We'll see. I'm probably going to be bearish on Apple, but bullish on the other three. Okay. Customer picks last week. Let's go see what you guys did. Go back 1 week.
I think we're all going to be in the red.
Yeah. Quick test. Good. Oh, they did better than me. They did better than you.
-2.
OpFi nicely up. FTAI, GoDaddy, biggest loser was LAES. Stock pick that Ryan likes. TPC, TSM. These were the stocks that not have the. You guys did better than both of us. You guys did better than both. We're probably not going to do your picks this week because of the Fed. All right. Glenn, this Fed rate chart. What are you talking about, Lee? The longer the Fed rate stays higher, the worse the economy will feel it. A lot of companies will need to roll over debt this year following. And again, do we need a cut? No. But we are so spoiled to near zero interest rates.
That's the problem with pricing and inflation right now.
Until we get back down there, you guys, everybody's going to, oh my gosh, the market's going to crash and the world is going to end. And we're historically still low. We're historically still low. All right. We got 4 minutes. 4 minutes. Let me go back. See if I can do this.
Should we check our portfolios?
Oh, yeah, we can do that.
I wonder if I'm holding the Bitcoin still.
Bitcoin yield maxes. I'm going to do another follow-up video on that. AMA Ryan, where are you? In the negative. Way to go. You were up, You were up nicely. You were and
it's all right.
No.
Those are my position, my Ethereum, didn't quite work out, but that's fine because I'm double leveraged Bitcoin and about, was that 20? I think that's like 40% of my holding.
Yeah,
how many do we have?
I wouldn't do that, but
scroll over to the right. Yeah,
you put
40%.
A lot of money into that. That's crazy.
Yeah,
but that's you.
And it's my only winner, though.
I hear you. All right.
It's my only.
And
TSM
Glenn
went up. Did you see TSM jumped up? It was up 10%, 15%, and then it fell. DeepSeek. Oh, DeepSeek.
oh, what just happened? Oh man, hold on.
Did you cash me out?
Whoa. No, nothing got out today. I don't know what that is. That's weird.
We'll refresh it. We'll take a look at it after the live stream.
That is weird. I'm up slightly. Coin, Microsoft, IOQ. What's hurting me the most?
UAM1.
Only down 4%. This is
it's sitting right at like a little good pivot point. That thing might just take off in a minute.
What happened with yours? That doesn't make sense.
Yeah, as soon as I was getting up for the day too. I see what you're doing over there, Glenn.
Oh, I'm trying to see what just happened.
We can address it. I mean, we can add it.
There it
didn't
is.
Sell them, did it?
Wow. All I did was put the stops on.
Oh, no, you weren't supposed to use stops. Not my Bitcoin.
What do you mean?
What do you mean? I don't know what you just did, but we'll get me back in those stops. I'll have to take a look at it. That's kind of weird.
Well, we do have stops on the portfolios, yes?
But not all three would have just got stopped out in 30 seconds. I don't know.
All I did was just put the stops on because I was like, it's off. I said, oh man, because that could hurt you. That's all.
I'm down.
But that's weird.
Well, put me back in $20,000 or the BITU.
You can come on. I'm not doing that right now. But I will do it. That was weird. All right.
Let's go. All right, we gotta get to the Fed. It's 229.
There it is. Let's get ready to come up. Now, Clay, if you're in the background, I gotta make sure that I can make it so that they can hear it. All right.
Your desktop audio is already on. So
they should be able to hear it? All right.
Yep.
The Baltic Dry Index is at its lowest since February 2023. You notice that, Ramon, there's no shipping stocks that are on the rise right now? You notice that there's no shipping stocks on the rise right now. Ain't nobody shipping, outside of what they normally do. OpenAI accuses DeepSeek of AI theft. That was one of my stories today that I put up there, Nick. Oh, I can hear the people coughing. Do you hear the people coughing? Man, take a Delsum or something. Take some Mucinex. Man,
Pawan says we will see some layoffs coming in the first quarter. I think we saw layoffs second half of last year. I'm thinking unemployment ticks up, and that's when I don't know. I don't think we should be cutting interest rates anytime soon. But that's just me.
I've been
Even
saying
if we do
I've
get a
been
little
saying
tick
that
up
for
in
the
unemployment.
longest, but nobody listens to Glenn.
We could take some unemployment right now. We need to fix this pricing and housing. We got too many things to fix. If Kodak hasn't laid the foundation for image processing, would AI vision technology have advanced so rapidly?
Kodak blew
No,
it.
no.
Kodak blew it.
The last time Kodak popped was because of a meme. The short candidate.
Kodak
That was like one
had
of the
the
OG meme
market.
stocks was Kodak.
Kodak had the market on cameras and film. They blew it. They blew it. Where's Joey? Joey's off today, Fernando. Let me close this. I don't want that.
Good afternoon.
Can everybody hear that?
My colleagues and I remain squarely focused on achieving our dual mandate goals
Yes or
of
no?
maximum employment and stable
No.
prices for the benefit of the
I've got
American
it on
people.
mine. I can't hear it.
The economy is strong, is strong overall,
I hear me and
and
you.
has made significant progress toward our goals over the past 2 years. Labor market conditions have
There we
cooled
are.
from their
Exactly,
formerly
Ramon. We need a
overheated
good
state
correction.
and remain solid. Inflation has moved much closer to our
they should be
2%
able to hear.
longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid.
Solid.
Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures.
Not.
Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%.
That's one of his favorite
Longer-term
indicators.
inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices.
How many times
We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, here comes the questions.
A lot of fluff so far.
Yeah.
Chairman Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately.
Yeah.
So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
Nice questions.
3 questions. I'm seeing it really as one question though. So I'm not going to have any response or comment
very good
whatsoever
question.
on what the president said. It's not appropriate for me to do so.
Nice.
The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact. Thanks.
Interesting.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said
think I'm
around
on
the
a
time of
delay,
the last
Glenn,
meeting that
like
your
they are.
policy stance was meaningfully restrictive. Given economic and financial market development since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. we want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal. And that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance.
See that market
And I'd
rebound.
say you look at the last couple of inflation readings and you see we don't overreact
Honestly, I think
to two
earnings
good
will be
readings or
more
two bad readings, but nonetheless, the last
of an
couple of
effect
readings
on the
have
market
suggested
over the next
more
24 hours,
positive
I think.
readings. So I
This
think
will.
I think policy is
Especially in the big tech
well
companies.
positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year
And Fox,
as it
I
related
like
to the labor
Kodak. I
market.
just pulled up the stock chart.
And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret too good or too bad
turn it
readings,
up
but
like that?
this was not meant to send a signal.
do that.
Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
I'm glad to see my SoFi.
Just to follow up, we've
Rallying
seen
right now.
inflation
I still own it.
expectations
Wow.
across a number of
Look at
measures
the
rise
bump.
sharply, which has in part been linked to tariff concerns.
I bought an option
But there's also
yesterday
been this
after
encouraging data that you mentioned in terms of CPI and rent indices.
Hasn't really done anything
So
for now.
how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much. And I think we need to let those policies be articulated
see
before
the-
we can even begin to make a
So you can see
a
what they're
plausible
doing,
assessment
yeah.
of what their implications for the economy will be. So we're going to be watching carefully, and as we always do. This is no different than any other set of policy changes at the beginning of an administration.
Yeah, he's
We'll
gonna have to
patiently watch and
respond
understand, and
according to how all this plays out.
kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Nvidia's still
Well,
down
at all
122
times,
right now.
at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder. And meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know. And so you're just
Yeah,
on
I think
hold
the earnings
waiting
going
to
to have
see
bigger effect.
what comes
He's pretty
down.
much saying he doesn't know.
It's a
That's
very
why they
large
didn't change
economy,
interest
and
rates.
policies affected at the
Once we
margin.
see the policies
but
in action,
we're
then
going to
we'll
wait and see.
Assess.
If I can follow up, the idea that you feel the economy, that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
You know, we're looking, it's more the way it works is we are looking at the data to guide us in what we should do. And, you know, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And, you know, as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
The job market and layoffs is going to force the Fed.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes, in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available. And as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Just follow up quickly on that. I'm wondering how you're getting that to be consistent with the Dodd-Frank laws stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law.
All right, let's close it.
Which is government.
I know how to do that.
You know how to do that? I mean, I'd be impressed if you did, but you got to hit that little X at the top right.
Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent?
Done to, yep.
Right.
I had a feeling. I mean, I wasn't getting anything out of it. I mean, like maybe the first 5 minutes, but I don't want to waste y'all's time.
What was the number? 2 was for what?
2 was let's just knock out 10 stocks before we head out for the day. Or I guess not for the day. We'll be back 4:45. I think that will be the timing. Yeah, 4:45. Meta's at 5. The earnings call. So we'll talk for a minute. Do Meta's earnings call. Listen to it. Look at the chart. And then 5:30, Microsoft, which will be the earnings call we listen to. Tesla also reports. So we'll be looking at both of those. Okay.
All right. I see
All right.
VRT, VST.
Yep.
There's 2. Keep going.
Waiting on stocks. Well, it's on quite a delay today, so give them about 15, 20 seconds.
Is it that much of a delay?
Yeah, because I'm listening onto the other one on like my other monitor. It's quite a delay. See, there's still barely. Yep, there. Now the stocks are coming. CEG.
Yep.
All right. MSFX. OLKO. That one comes up about every.
I don't have that. LLKL.
OLKO.
Oh,
Or
Oklo.
I think it's O. Yeah, it's
OKLO. Okay.
Yeah, Jazz. TATT.
Can you
Bug,
say that on?
BU.
What?
TAT. Stop. Bug. BUG.
Yeah.
APD. ALK. WDay. I think that's Workday. Will this be on YouTube or VectorVest site, Ryan? This will be on YouTube, Ramor. NVD. Sorry, a lot of stocks coming. NVDY. We got the yield max.
Yep. One more.
PSIX.
Should be about 10.
If not, the next stock is.
I got
Animo.
12. There you go. All right.
That's it.
Let's keep them out.
We got 12.
2 of them are cells, VRT and NVDY. By the way, I got rid of my NVDA and NVDY. I still hold Palantir, PLTR, and PLTY. I I still have Palantir in the yield max, but I got out of my NVIDIA trade and the yield max. All right, let's go peep these out real quick.
I think the NVDY yield max, that's a dip maybe worth getting into, because those yield maxes aren't good for trade. I mean, you can trade them, but
that's not the cause of. That's not what you trade. That's not how you play them.
No, I know those are long term income strategies.
TATT, I like.
Yeah, I got trend, trigger pulling away, momentum growing. Yeah, volume still rising.
I broke this thing.
Uh-oh.
I broke my chat.
Right. Live stream over.
Oh, Sugarfoot. Dang it. Well, anyway. The question is, do you guys want to buy anything in your portfolio given the current market conditions? Yes or no? But write this one down just in case. All right. Next one. PSIX.
Amir,
huh?
Watch my video tonight, Amir, on NVIDIA. I go 2 stocks, and the video is like 15 minutes long. So much deep chart analysis, you'll get your answer. But yes, PSIX.
No.
I don't like the triggers losing momentum there.
And I don't like the big wick at the top and the small body.
Especially with the market uncertainty. I'm going to say no, not today.
I'm going to say no, too.
I wouldn't count it out in general, but not today. That's beautiful.
That's like ICAGY, another airline. I say write that down.
ALK, yep.
ALK. W-Day, I like the move up. I like the trend. We don't have trigger yet, but you know me, I'm not going to write. That's a dark cloud cover as far as candlestick pattern. You know me, I'm not going to buy on a down day.
But I do like a brand new trend. But yes, wait for that trigger, especially like you said, dark cloud cover, down day. This might just shape up for some more upside.
Whose voice is cutting out, Phyllis? Let's go to the next one. APD, trend trigger, volume is falling. Watch that. Volume is
especially as we approach that prior swing high. Do you see that? Yeah, I don't like that downtick in volume.
That's a bearish divergence. Voice in and out. Is it mine? Let me go do my mic thing again.
That would not be good on your desk.
There we go. See if that works. See if that works.
I think pointing out that bearish divergence. Otherwise, we got trend, we got trigger. But yes, I would take caution of that, Glenn. Good call. Good eye.
Bug.
Look at that volume yesterday. I do like that.
I wonder what the news was. It's down today.
Cybersecurity. Is that Global X? Yeah, it's Global X cybersecurity.
After
cybersecurity ETF.
After Deep Suck got hit. So we're gonna call Deep Suck Hoover vacuum cleaner.
Call it deep. Did you call it Deep Suck?
Yeah, Deep Suck. We're gonna call it we're gonna call it Hoover. So I'm gonna call it Hoover.
Hoover.
Not today. Ooh, that could be setting up as a reversal. A little bit of a hanging man. We got trend and trigger, but that could be possibly right at a level of high, swing high. That could.
I'm gonna say, if you're holding Microsoft 2 times leverage, just know you're in for a ride. Either way. And if you ain't comfortable with that kind of ride, you might as well get off the train before 3:59.
Carol says that sounds like a porno film.
Yeah, Carol, I
met Carol. Carol,
I saw the dirty jokes in my head too
wow.
when he said that. I just wasn't gonna say anything. Let him ride with it.
Oh boy! All right,
especially when he brought out the Hoover.
Let's go to the next one. Vistra, I like trying to fade the gap. We lost trigger. We got trend, but after getting beaten up, trying to fade the gap. I do like that. The audio is messed up, y'all. Whose audio? Is it mine, or is it both, or is it Ryan?
Maybe I have mine too loud. Might have been an echo.
All right, and let me turn my. I'm gonna turn my speakers down. Go ahead, say something else.
That's what I think I had to do.
All right. Hopefully that makes it better. I do like the move on Vistra. I like that it broke through the gap. Little wick at the top. Write that one down. I don't like
Sure.
the,
Yeah,
I don't
and
like
I
the
mean
trigger.
it dropped unless it had earnings. I mean it dropped during the whole DeepSeek thing on Monday. That gap down over the weekend.
Let me keep my eye on that. Same thing with VRT. So both of them are saying both of us.
But see, oh, VRT, I like it just because it's getting much closer to its valuation. I like VRT. It's probably a dip worth, exploring. But if you ever throw our value on there, it's getting close to its valuation. I think there might be a little bit better opportunity. We'll see.
I'm thinking that this is going to be a hot stock, especially for what it does.
Mm-hmm.
Capital
Oh yeah, definitely a
appreciation,
hot stock.
Value. Yeah,
See what the value is
overvalued.
doing. Yeah, see, it's getting much close. Well, the value dropped a little. But so yeah, you're paying a little bit of a premium, but again, I'm with you, Glenn. I think this is a dip worth exploring.
Okay. Oklo. Big wick. I got to come up with a pattern for that. I don't know what that's called. I've seen that a lot. I don't like the big wick at the top of the candle. It did try to fade the gap down from the DeepSeek thing, but a lot of give back on that big wick at the top. Be careful. The volume is there too. Volume is there. I just be careful with that. Same thing with CEG. I think I still own CEG. It didn't hit my. I gave it an extended downside move. Nvidia did hit that. CEG has not. So we'll see. A little rebound.
Yeah,
today.
I think the energy on this dip, because a lot of these energy plays are obviously tied into the data centers. I think the energy dip is probably safer in a lot of ways than some of these technology dips.
I agree.
And then you're still kind of playing the same momentum, the same policies. Who knows what'll happen.
I'm telling you, folks, keep your eyes on uranium. I've just been looking around, little bits and pieces about how the government's going to get, and that's how CEG jumped, is because they're going to be providing nuclear for the government for power.
Okay.
Uranium this year, I think, is going to take a huge step up because more and more people are going to get into it. Of course, we do know it takes time, but something tells me a lot of this stuff is going to be fast tracked. All right, we're going to hurry up because I don't know how to fix the audio. NVDY, again, you don't play it for the price, but if the price decline outweighs the premium that you're getting paid for the income, you pull out. I'll talk a lot about that on Friday. All right, folks, we're going to get ready to go. Sorry about the audio. I got nobody here besides me and Ryan. I don't know how to go in to fix change any of the audio stuff. Clay is in the background, but he's kind of tied up, and Joey is off. So I do not know how to fix, and I apologize for that, Lee. I apologize for that, Phyllis, as well. All right? We're not going to even talk that much anymore. I'm not going to even sign off. Remember, 4:45, we'll be back here for live earnings calls. So just know that, all right? With
Powell was lackluster, but I have a feeling these earnings are going to be exciting.
And I think he's right that the earnings are going to be more of a mover of the market than the Fed was today.
And we're getting mixed. Audio's fine.
Yeah.
Audio's not fine. We'll do a test. We got about an hour and some change. We'll do one, a test just to make sure it's good. And we'll see you guys at 4:45.
See you, folks. Later.
Bye.
Click end broadcast.
If Glenn ends the stream.
End broadcast on the right-hand side.
Bye again.
Up.
Bye.